Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, June the 24th, the year 2018. Let's talk trading. Weekly open and gap. And it looks like this is the last week of the month. So if you haven't done so, it's time to start applying good, strong, solid money and risk management. Okay, looking at the monthly, you can see here the dollar yen is still within that upper wick zone of last month. Well, let's get on to the weekly. Okay, you can see here we've got a bunch of fills already. Dollar Canadian still hasn't filled, New Zealand Japan still hasn't filled, and the Swiss Japan hasn't filled. So there's still a couple opportunities out there. Hopefully some of you took advantage of the weekly opening gap. Looking at the dollar yen, you can see here we've got a huge wick on the previous daily session candle. We're in that lower wick zone at the moment. And we're only in the third hour of trading, so not much range at the moment. At this time of the week, we're just looking to take those gap trades. Okay, you can see here the pivot point got taken out. So anybody trading that pivot point, fading the pivot, which also would have been fading the gap, should have collected profit. We've only got a 20 pip range. There's no rat zone. Once again, showing the pivot. You can see the weekly pivot here, 110.09. Looks like we've got some overlap here at the 109.43. Let me let's see. We've got S1 here at 109.77. Weekly pivot at 110.09. Let's see. Fading the weekly pivot. Let's see if that works later in the week if we take out that weekly pivot. And here we go with the pivots once again taken out. We still have this open daily pivot here. 45 days ago this pivot was missed. As you can see here, for the year, we've only got 5 years, almost halfway over, and we've only got 5 missed pivots. Price action. Hasn't been much price action so far. Like I said, we're only in the third hour. Still waiting to hit one of these lines. We're in the lower wick zone. Price doesn't like staying in the wick zone, as you know. Holo 109.82 lowest open, 109.97 highest open. See, there's a nice short right there. Good for what? 9 pips. This most likely will change throughout the course of the trading day. Tick chart. Now, for those of you who don't have that indicator, if you hit F9, you can bring up the tick chart like so. can see a whole bunch of 84 prints. Now printing 83. Just gave me an idea. Might be interesting to have one more column out here and just forget the that new extra decimal point, which I hated them when they did that. But we could count the number at 83, number at 84. Might be interesting. Number of ticks at a certain price, kind of like a market profile. And here we go on the inventory reduction bars. You see that long trigger was probably a scratch trade there. Short trigger picked up a few pips. And looking at just the daily, weekly, and monthly highs and lows. You can see here we crossed one line, put in a weekly low, reversed. The Einstein line, you can see right here, we had called it short. There's a few pips to be had, about 6 or 7 pips. And something I want to show you. No, these aren't really squiggly lines. What this is an old indicator I dusted off. TRO-OHL plot 2. I think I wrote it back in 2009 or 2010. And all I'm doing is just shifting the high point over by 1 here and the low point. So this is the previous bar's high, previous bar's low, or candle in this case. Why? Well, it's almost similar to what I do with the spread dots. So you see here, you kind of got this lowest high, and once price breaks out, then you know price is going up. And ditto, once you see price going through the highest low, then you know price is coming down. So it's kind of the same idea, but only on a 1 minute chart. I was wondering if maybe, just maybe, that might give me a clue to filter out when you get buying. Maybe you got some buying here, then you can see, you might be able to either scratch out the trade or just say, nope, I'll wait. It's just something to watch. So once again, if you've downloaded some of the old mother loads, I think this was in 2010. It would be in the newer ones too, but I think I wrote this in 2010, maybe 2009. But since this is the weekly, let's just take a look at these others that haven't filled the gap. Might take a little while. So we have a high of 28. $128 or 111.28.1, but the close was 111.28.6. And that's pretty much close enough, right? But the indicator goes out to the decimals. Oh, looks like looks like the dollar CAD filled. while we were away for those few minutes. Wasn't much of a gap. Let's see, opened at 65 and it closed at 76. That's a nice little profit for a Sunday / Monday open. And let's look at the New Zealand yen. See, we have a close of 76.059. And so we missed that. We have 76.056. We missed that by 3 points. That's almost a close, almost a fill. So once again, if you got in early enough to pick up some of those gaps, you were rewarded. So I hope you stay tuned this week. I've got some more things to talk about on why you do not get better at trading. So hope you guys will tune in later this week, starting tomorrow. In the meantime, just remember, it's not what you trade, it's how you trade it. TheRumpledOne off to drain the banks.